Hello and a very warm welcome to Bharata First. You're watching Big Picture with me, Rausan Pereira. And since you're here, I would like to thank you for your continued support. For those of you who haven't already subscribed, please like the video, subscribe, hit the bell icon and then all notifications. Do follow our social media handles for all the latest updates, and you can also subscribe to our newsletter to get some incisive content. The Bharata First team is running a daily quiz. The winner will get to interview me in a program called Hot Seat that airs at 6 p.m. on Saturdays. Details are in the description of this video. Now, here are the UPI IDs for those who would like to come forward and contribute. They are also in the description of the video. A small contribution you make will be a giant leap for us to keep bringing you this content. So do continue to show your love and support. Now, India, Japan, and Australia on Tuesday formally launched the Supply Chain Resilience Initiative to build resilient supply chains in the Indo-Pacific region as they seek to reduce dependence on China, and said it could be expanded based on consensus. Commerce and Industry Minister Piyush Goyal, Australia's Minister for Trade and Tourism and Investment Dan Tehan, and Japan's Minister for Economy, Trade and Industry Kajiyama Hiroshi held a ministerial video conference on Tuesday to launch the initiative. The three nations are seeking to build stronger supply chains to counter China's dominance as trade and geopolitical tensions escalate across the region. In this edition of Big Picture, we will analyze the Supply Chain Resilience Initiative. Joining me on the program today are Ambassador Gurjit Singh, former diplomat, Elizabeth Braw, resident fellow, American Enterprise Institute, and Ajay Shankar, former Secretary, Government of India. Thank you to all my guests for joining me on this edition of Big Picture. Ambassador, let me start the program with you first. What do you make of the Supply Chain Resilience Initiative? Do you think that it, where can it lead to? Where do you see it going?
Thank you. I think the reason we are discussing this is because the trade ministers of India, Japan, and Australia finally, after about 6 months of discussion trilaterally, announced the launch of what is called the SCRI. It was, I think, first talked among them in September last year. The important thing of the Supply Chain Resilience Initiative is that it is a direct consequence of the pandemic and the idea to diversify your production lines away from China or plus China. According to that, there is also then this concept of strategic partnership, which brings in, say, Japan and India are well-known partners, but Australia and India a reluctant partnership. So bring them together. The reason for bringing them together is the Quad strategic partnership, which is the motivator. And of course, then there is the absence of India from RCEP, which would remove us from preference rates of tariffs in the region in order to get investment and yet take advantage of whatever preferential access we can. We are now heading into the SCRI. India's point of view, the SCRI is to fulfill Atmanirbhar Bharat, which means we want more investment in manufacturing, which will create jobs. From Japan, the main focus is on the digital economy, 5G, bringing in the Indian software skills with their hardware skills to have better standards and stuff like that. But they realize that India needs manufacturing, so Japanese investment in India is likely to increase to cater to this as well. With Australia, this remains largely a big conundrum. There is a strategic intent to collaborate, but please remember that with Australia, we have no FTA. And in fact, Australia was one of the biggest hurdles besides China for India to join RCEP. So unless there is a change of thinking in economic terms to match the strategic change of thinking in Canberra, the SCRI will not go beyond what the three ministers said yesterday.
Absolutely. Mr. Shankar, let me bring you in now. Let's talk about diversification and how important it is to diversify our supply chains, because the pandemic, the ambassador was talking about the pandemic. The pandemic has also taught us that we can't be too reliant on China.
Let me put things in a bit of perspective. Japan has invested heavily in China over decades and has been a major contributor to China's modernization and becoming the factory of the world. Australia is well invested in trade with China because it's been the biggest market for their mineral exports. Our trading relationships with these two countries are still, relatively speaking, modest. So that's one part of it. The other is that the international community has seen after the pandemic that over-reliance on China is a problem because in a crisis you can be suddenly starved of something you took for granted. So there is a recognition in the global community that apart from seeing the most or establishing the most cost-efficient supply chain and therefore being the most cost competitive, we need to mitigate against risk and look at alternative locations for your supply chain as a risk mitigation measure in terms of being a prudent corporate entity. So these are the two kind of parameters within which we should look at this initiative. Now this offers India the maximum opportunity because there is a willingness in global supply chains to look at risk mitigation. And I suspect for these reasons as well as political and strategic reasons, there is a willingness to support India's rise as an alternative location for global supply chains. But the success of all this would depend on our getting our act together. Because at the end of the day, it is private firms who will invest, not the political leaders. And they would invest if they see returns on their investment, they see a business case for that investment. So this is where we have to get our act together and do a little bit of more focused diplomacy or investment promotion or industrial promotion, is to figure out which bits of the global supply chain are relatively speaking low-hanging fruit. What do we need to do to get it into India? How do we make the business case for a potential investor compelling enough? Now, this is a lot of hard work. This is a lot of crossing of T's and dotting of I's. And this is the kind of work which I think in the government of India and its investment promotion exercise is at an early stage. Because we so far have been focusing on saying we've improved the ease of doing business, our global rankings have gone up, our tax rates are more attractive, whatever. But I think we need to go beyond that and look at specific bits of supply chains, talk to people who are in that business, figure out what is it that we need to provide for them to come to India, not to get out of China, but as a hedge. And once they start coming in and start making money, they start singing our praises, then the sky is the limit. But initially, we have to make that breakthrough by concerted action. And I repeat, this is still at an early stage as far as the ability and the efforts of the government of India are concerned.
Absolutely. I think those are very valid points that you raised and that you've made. So let me take this particular aspect forward with Elizabeth Braun now. You know, this issue of over-reliance on China and how the world sees it as a problem. It's a big issue as far as Europe is concerned too, because of late we've seen that not just the US, but even Europe is suddenly very interested about the Indo-Pacific and about how to secure supply chains as a whole. Your thoughts, Elizabeth?
Yes, that is precisely what's happening, and it's not new, of course, that all kinds of countries are dependent on China for various parts of their supply chain, not necessarily the complete products, but various bits. And without those bits, the rest of your supply chain is useless. And as we have seen, not just during the COVID crisis, but during previous crises, for example, the Fukushima incident, a combined nuclear accident and tsunami that cut off supplies or production in that region. If a particular part of your supply chain stops working, then the rest of the supply chain will stop working too. So it can be a pandemic, it can be a tsunami, it can be a hostile act by another country. But the point is, your companies are disrupted, and so there is growing realization that governments have to help their companies secure their supply chains. But as Mr. Shankar said, that's easier said than done, because companies operate on a profit basis. They don't do things for geopolitical reasons or just to plan ahead. So I think what will be very interesting to see is how the more advanced bits of the supply chains, how the governments of India and Australia and Japan can help those companies move vulnerabilities, remove vulnerabilities by, for example, going away from single source suppliers in China to perhaps, for example, having additional suppliers in India. Because what's happened so far when companies have moved out of China has been mostly lower margin production, such as clothes manufacturing, has been moved to Bangladesh. But what we are talking about in supply chains are more higher value steps that have to be that should be replicated so that countries are not dependent on China. So I think this is an opportunity actually for India to get some of these higher value bits of the supply chain into India.
Absolutely, absolutely. So, Ambassador, let's talk about another aspect. You know, whenever we speak of Quad, we've been very cautious to say that this is not a grouping against China. But what about the SCRI?
So the SCRI is a subset of the Quad. And I put it to you again that Australia's participation in the SCRI is because of the Quad. Because simply for trading reasons, they were messing up our life in RCEP. So there is a distinct movement from us in Australia based on strategic reasoning. Second, today it is not only the pandemic. Sichuan Airlines suspends cargo flights to India, and our value chain on APIs is disrupted. So India's miracle pharma industry is today going to come down to its knees unless we negotiate the return of Sichuan Airlines. A simple fact. The blockage by one accident of the Suez Canal had the Japanese very worried, because it is not the oil only, it is the delivery just in time as per their system. Similarly, Chinese threat to Taiwan is causing havoc in Japanese thinking. So what the Japanese are thinking, that we must have multiple sources of supply. This is not to say that I will shut down China, but it is to have +1 options. The ideal +1 options for them are Vietnam, Thailand, and stuff like that. But for strategic reasons, India has to be brought in, because India did not join RCEP despite Japan's cajoling. Now, what Mr. Shankar has said, what I said about India wanting to benefit from it. But we need to make sure that what we do is compliant with the values and standards of global value chains. Most Japanese companies find Indian companies do not have those standards. Now, 26% of Japanese exports from India, 26%, goes to ASEAN countries under the India-ASEAN FTA. No Indian company matches this. Now, therefore, Japan wants ASEAN to be included in the SCRI. India says no, because India says we were going to deal with ASEAN bilaterally by revising the India-ASEAN FTA, and the SCRI is meant to get strategic partnerships leading to more FDI into India. If we brought ASEAN in, they will grab the FDI because some countries are better organized than us. So we need to A, get our act together, B, grasp this opportunity. Now, both the other panelists have mentioned about business. Let me tell you, this is not an untested idea. Japanese companies in the last 5 years have invested in India to export to Africa. There are specific new lines, and I can give you several companies' names which have opened new lines only to expand exports from India to Africa, because they have customized their production to tropical climates in India, which suits them. and they are able to service this by training engineers out of India, out of Africa to provide this servicing. Maruti is only one such example. There are many other examples like this. So it is a tested idea that this can work. But if you want to go to other markets like ASEAN, East Asia, Europe or USA, then the standards have to really come up. And there are efforts being made by Japan, the EU, Germany to deal with Indian industry organizations to raise their quality standards, to bring them up to a level where they become capable of being part of global value chains.
I think that's a very valid point and an important point that you've raised that I want to take forward with Mr. Shankar. Mr. Shankar, how do we ensure, this happens? We need to have some level of, standards and something to match really as far as global standards are concerned. How do we do that? Who does the onus lie on? Is it the government? Is it the private sector? What's the best way to deal with this particular issue?
A good model which is worth understanding and emulating is the Japanese model, where industry and government and political leadership in the government as well as the technocratic leadership have all worked together harmoniously for over 5 decades to take Japan to where it is. And it was this model which was copied by Korea and then by China. Now we are yet to reach to a point where there is creative, constructive dialogue within closed doors between leaders of industry, leaders in government, political parties, consensus on a roadmap, and then focused action for achieving those results outside photo ops and media headlines. Now, that is something which we have to learn to master. Because if we don't do it, then success will elude us again. Because if you just to move into something more specific, we are right now experiencing a crisis in oxygen for dealing with the pandemic. Now it turns out that India produces more than enough oxygen, so there is no shortage of oxygen. But the supply chain of oxygen for medical purposes is something which had not been properly understood within government, nor did we work in partnership with people who are part of that supply chain as to what we would need to do if the demand rose. And we are struggling to get our act together. I'm sure we'll do it in a couple of days. So that's the weakness that we have, that we do not have a system of close analytical partnership with industry within India on addressing issues which need to be addressed to make India competitive. I'll just give one more example to just drive home the point. It is often said that our software industry succeeded because government did nothing. It was left to the market. Now that's a convenient myth for those who believe that markets work miracles. The fact of the matter is that this is one example where governments did the smart thing. So they did not create a ministry, they did not start licensing. But what they did do was to invest public money to create real-time IT links with enough bandwidth for producers of software in India with their customers in the US market. This was done 20 years before Indian telecom sector modernized. And the other thing they did was to give these people a free trade regime in terms of both hardware and software. And then we've seen the enormous success. Now, in terms of manufacturing, we have somehow left it entirely to the market. So we have not created industrial manufacturing zones with public money, which match the infrastructure of our software parks in being globally competitive. We have not created expressway connectivities from these manufacturing zones to our seaports and airports. So logistics take twice as much time and twice as much cost in India. So unless we focus on these nuts and bolts issues and get our act together, I'm afraid this opportunity will also elude us. And some of the decisions we have to take will be not easy. For instance, we tax petrol and diesel at over 50%. Now, it's an essential ingredient of logistics and cost of manufacturing and doing business. So ideally, it should be under the GST. It should be at the lower point of the GST. Now, there is an enormous amount of revenue which state governments and central governments would have to forego. But if we don't do this, then all the subsidies of the PLI scheme are peanuts compared to this big cost, which everybody is incurring. So one has to look at things and discuss hard decisions and create a consensus to take. Otherwise, again, because when we go to a private firm, their analysts will do some calculations and come back and say, India is not yet an attractive enough destination.
Absolutely. This is something that we need to change, and this is something that we need to change sooner rather than later. Let me come back to you now,
And the
Elizabeth, and
focus, I
go.
would say, is needs to be cost of doing business rather than just ease of doing business.
Absolutely. I think that's very important. Not just ease of doing business, cost of doing business also is absolutely important. Elizabeth, if I can take the point that the ambassador was making forward with you of Sichuan Airlines and how the Chinese have been brash and brazen, and not just with India, but everyone around the world, and everyone is concerned about what China has in mind and has in store for the entire world. And we've seen the kind of statements that have come out from China, from Chinese diplomats around the world as well. In such a situation, can we see more like-minded countries coming together, not taking on China militarily, but at least on the economic front through supply chains and other initiatives?
Oh, we definitely will. And we have seen in just in the past few weeks a number of examples of China essentially trying to hurt foreign governments by harming their companies. So we have seen China suspend imports of Taiwanese pineapples. I mean, I don't think a single Taiwanese pineapple farmer thinks of himself as political, but yet Taiwanese pineapple farmers are being punished. H&M, Swedish fast fashion retailer, I think probably thinks of itself, in fact, I know it thinks of itself as a completely apolitical company, but it had its operations, its retail in China stymied because China, entities of the Chinese society decided to punish and boycott China as a result of it being a Swedish company. And the same thing happened to Burberry, the same thing happened to Nike. And if no company can operate safely in the Chinese market, either for production or for sales, then they'll conclude, yes, we'll take a loss by reducing our exposure to the Chinese market, but it's worth it because having this sort of constant fear of being punished, of being boycotted, of supplies being disrupted, that's not a sustainable business strategy.
Absolutely. All right, time to get quick closing comments now from all my panelists with the best way forward in such a situation. What do we need to do? Starting first with you, Ambassador.
Thank you. So I am not so pessimistic. I am actually quite optimistic. I think there were errors we made by not joining RCEP, but I think we are using the strategic option to try and have further partnerships with people in the region. The size of our market remains a big prize. Europe, with its Indo-Pacific outlook, is very clear. That outlook doesn't think of China. It is thinking of India and ASEAN. It is for us to maximize it. So we don't have to keep thinking of ourselves as a shadow, like living in the shadow of China. We need to get out of that and engage with all our partners in our own way. And as Mr. Shankar has said, we need to get our act together. Because if we don't get that act together, there are nearby countries, even Bangladesh, doing better than us in many ways, which may take away some of the... Now, I'll give you an example. Kagome, which is a big Japanese producer of tomato sauce, they get tomatoes from Xinjiang, the Uyghur area. So they are under pressure not to buy. So they are going to suspend further buying of tomatoes from the Uyghur areas. Now, I know Japanese Kagome has invested in India in tomatoes. So this is the time for Kagome to uplift its Indian operation further. So this is the +1 approach that I am looking at. Now I can tell you many on the Japanese side. My problem is I am unable to decipher what complementarities we can develop with Australia. Therefore, we are now looking at Europe. We are also looking at France getting involved. So I think we need to look at a larger set of markets and see how complementarities with them can be worked out, making sure that not only our digital skills, but our manufacturing and employment generation motivations are fulfilled.
Absolutely. Mr. Shankar?
I think we have a historic and a golden opportunity, but we need a lot more energy and ambition in getting our internal act together. And internally, we have huge positives because we have enormous depth in terms of our HR ability resources in the country. across the entire value chain. So lower level workers to IT professionals to designers to mid-level managers. So we have an enormous resource there. We have a huge growing market, and we have Indian companies which in bits and pieces are as good as the best in the world. So all the potential for creative partnerships to achieve our full potential is right there. But we have to get our act together in lowering the cost of doing business, paying the price for it, and working in genuine partnerships with Indian industry so that we get the FDI and the global partnerships that we need, and which is our for which we have enormous potential. But we must not be sanguine. We must recognize it's a huge challenge, and we have to work very hard to achieve full potential.
Absolutely. And Elizabeth Braw, close the show for us with your concluding remarks.
I think if I were the Indian government, I would meet with as many Western, meaning European, Australian, Japanese, American, North American companies as possible to find out what sort of supply chain needs they have, because it's easy if you're Bangladesh or Vietnam, you focus on allowing them or helping them set up textile manufacturing. But China has many more opportunities and along a much wider stretch of the supply chain. But it's you need to know exactly what those needs are that Western companies have, Western and other companies have. And if I were the Indian government, I would launch a range of conversations with Western governments, Western industry associations, and then invite Indian industry to offer those opportunities. And I think once the Indian government started acting as if it could act as that sort of broker of opportunities, there would be a lot of interest in setting up that, as the ambassador said, +1 opportunity in India.
Absolutely. All right. On that note, then, I'll call it a wrap on this edition of Big Picture. Thank you to all my guests for joining me on the program and putting things into perspective for us. What's coming out of this discussion is that the Supply Chain Resilience Initiative is a direct outcome of the pandemic and China's tactics. The world has realized that there is an over-reliance on China and there is a serious effort to diversify supply chains. This is a historic and golden opportunity for India. It is time for us to get our act together and take tough decisions. The government needs to open dialogues with other countries from around the world, see what they want and have tailor-made strategies. The road ahead is tough, but if done right, this can be our golden egg. Once again, thank you for your continued support. For those of you who haven't already subscribed, please like the video, subscribe and hit the bell icon followed by all notifications. Do follow our social media handles for all the latest updates, and you can also subscribe to our newsletter to get some incisive content. The Bharata First team is running a daily quiz. The winner will get to interview me in a program called Hot Seat that airs at 6 p.m. on Saturdays. The details are in the description of the video. Here are the UPI IDs for those who would like to come forward and contribute. They are also in the description of the video. A small contribution you make will be a giant leap for us to keep bringing you this content. So do continue to show your love and support. That's it from me. See you again next time.